Covered calls for premium, or set and forget and collect a dividend check, or both? That's what today's video is all about. Yo, what's going on, premium chasers? I hope you're having an absolutely God-blessed day. Today, every single person that comments down below is going to get this brand new ebook called The Covered Calls versus Dividends that we're going to be going over the shoulder. I'm going to be sharing with you. It's completely for free. I'm going to drop the link down below. Just drop a comment and I'm going to send it over to you. And while you're down there, hit that like button and that subscribe button. Today, we're talking about covered calls versus dividends, guys. We see this a ton across the board, this question, especially with SCHD. A lot of people love to hold on to SCHD because they collect a nice, almost like 4% dividend holding SCHD. And I don't know about you, right? But I used to be wanting to be a dividend investor, meaning that I could live off of my dividend checks. And as I slowly started to realize, not only is that a huge gamble, right? But also it requires a ton of capital. So let's go over the shoulder and talk about it. So should we buy dividend stocks like SCHD for passive income, or should we be selling covered calls for active income? Now, there are two camps, and honestly, both people are right in this situation, right? Dividend investors, right? We're setting and forgetting, and it is a passive income stream, right? We're putting our money in an SCHD fund, right? That has like the top 100 dividend paying stocks, and we collect a dividend check once a quarter. Some dividend stocks even pay monthly, right? And that's fantastic. But, covered call people, right? We often want more income, right? We're usually getting faster compounding, right? And we kind of control our own risks and control our own returns, okay? But here's the truth, guys. Both of these strategies work. Now, the reason a lot of people love to do SCHD is because these are essentially the 100 highest quality U.S. dividend paying stocks. You're getting access to all of them. You're getting a nice dividend, diversification, as opposed to trying to go buy, Coca-Cola, Home Depot, Merck, like all these dividend paying stocks that would require a ton more collateral, right? And it's really a capital efficient in that regard. Now, you are getting a little bit more, less of a dividend as opposed to going to those individual stocks, but because you're getting a less dividend, you are getting a lot more diversification. So what's the trade-off here, right? You kind of have to make that decision for yourself. Now, I personally do love SCHD. I'm an investor in SCHD, but I also love investing in individual companies as well. But if somebody came to me and was like, hey, do I go just right after individual companies? It depends on which one, I would say, for sure, right? And we'll go over some of my favorite ones here in just a moment, okay? Now, the thing is, right, if you own 100 shares of SCHD, you can also do something called a covered call with these as well. Now, a covered call is essentially if you own 100 shares of a stock, you can rent your shares out, essentially. Now, the way a covered call works is if we have 100 shares of SCHD, we can go out on the market and say, hey, we're willing to sell our 100 shares of SCHD on a specific date, right, and a specific price that we choose. So, for example, if you own, let's just say in this educational example, you own 100 shares of SCHD for around $30 a share. Let's say you sell a covered call, right? A covered call, we get to name the date, right? And the price that we'd be willing to sell our 100 shares of SCHD, okay? Now, right here, you could say, for example, let's say our strike is 31, right? Which is just a dollar above our current, current price in this example. We go 30 days out, and let's say we collect about $30 of premium on that, okay? Now, that's obviously income that is coming from the options buyer, but there are risks to this strategy to selling covered calls. And the big one, there are really just two, is let's say SCHD stays below $31, right? If it stays below $31, we're keeping the shares. We don't have to sell our shares, right? We keep that $30 of premium that's given to us up front, and then we repeat it the next month. So, right, if a light bulb is starting to go off, right, we are essentially kind of making a dividend for ourselves on a monthly basis, right? But here's the big risk of this strategy is, let's say SCHD goes above $31, right? Like, let's say it's trading at like $32, $33, $35 and at close in a month from now at your expiration date. Well, if that happens, you are selling your shares at 31. You miss out on any further upside, okay? Now, there are more advanced techniques to rolling your positions out, buying to close them early. All of those are covered in the first link in the description of today's video, the Ark Options Strategy Workshop. And in addition to attending that 2-hour class, you're also going to get my trade logs that you can keep yourself organized. Very important to keep yourself organized. And you're also going to get my premium calculators. These are a must-have, especially if you are selling covered calls and planning to do this strategy, so you're always keeping yourself nice and organized, since we are not day traders, okay? But in my opinion, you win either way. Like, I'm in the business of making money with my investing. I'm not just a paper gains person. Like, I'm paper gains in my buy and hold portfolio, but when I'm selling covered calls, I am primarily focused on income investing, meaning I'm trying to get in, I'm trying to get out, I'm trying to collect dividends as well, and really compound my money as quickly as I can, okay? That's the key, right? You want to make sure that you are sticking to a specific goal that you have, right? Your goals are completely different than my personal goals. We're all in different phases of our life, right? So for me, I'm focused on being an income investor, so I'm okay selling my shares. I genuinely am, okay? So, in my personal opinion, you mix this in with your annual dividend of around 3.5%, right? You're getting around $105 per year in dividend payments, obviously quarterly, right? You're getting about it's going to be over. I think a current SCHD is just around 3.8%. But think about that. Your return on capital is going to be exponentially higher if you layer on your covered call positions as well, because now you're collecting premium from those shares as well. Most people that just sit on shares, right, they don't put them to work. They don't do anything with those specific shares anymore, right? They're just collecting the dividend, right? But when you are collecting a dividend plus the premium on a weekly or monthly basis, right, you're compounding so much faster. And think about it. You're collecting that premium, which then you could essentially go and sell, or buy more shares of SCHD. Now, one thing to note is when you are selling cover calls, you always want to make sure that you are that you have 100 shares of the stock. Everything I do is covered. So every contract, one contract is equal to 100 shares. Very important. So if you have 200 shares, you could do 2 contracts. Obviously, you would get double the premium on that as well. But also remember, you are in a situation where you could end up having to sell your shares. Never forget the risk. Nothing is free, especially with options trading. That's why I primarily am an option seller. I like to set myself up as the house and really lock in gains whenever I can. Now, if I do end up getting assigned 100 shares of, like, let's say, or have to end up selling my shares of 100 shares of SCHD, right? What's the situation? Well, yeah, I made all that appreciation profit, right? That's fantastic. I collected a whole bunch of premium along the way. And if I'm still bullish on SCHD, I'll just buy another 100 shares and then do covered calls on it for the following month. But with that said, there are right times and wrong times to do things, okay? So obviously, like today, for example, if we quickly go look at the SCHD chart, you could see that it is shot above its top Bollinger Band area. Now, this Bollinger Band basically gives you a range that a stock is most likely to trade in. It's all a fugaz, right? But with that said, we usually see when we look over a period of time, right, we go above a little bit, maybe sometimes Bollinger Band, and then we retract down, we bounce off the bottom, and we kind of go ping pong between it. Now, again, it can shoot above and the Bollinger Bands will readjust. Of course they will, right? But right now, even with the RSI, which tells us how overbought or oversold something is, we can see the RSI is 63. We're in overbought territory. What does overbought territory mean? It means a lot of people are buying the stock. And if a lot of people are buying the stock, what does that mean? It shoots the price up, right? Basic supply and demand situation, right? So as the RSI goes up further, the stock price starts to go up higher. And you could see we are now above the Bollinger Band. So what would I do in a situation like this? Well, I would sell a covered call. Why do I want to sell a covered call right now at this time? Well, because most likely, obviously nothing is a guarantee, but most likely we are going to see a retraction. So if let's say I did a $27.50 or a $28 put on SCHD today, right, for expiring next month, most likely, right, when I open up that contract, right, over the next day, 2 day, or week or two, SHD is going to start retracting back down towards its Bollinger Band areas. And as it works its way back to $26, or even just ping pongs back and forth in this range, I'm going to be able to close out my covered call position early, and then, you guessed it, sell another covered call. Now, a quick rule of thumb, and it's pretty obvious, but there's some people that come here here from the Reddit world and don't realize that our strategy here is to buy low and sell high. So when you're doing your covered call, guys, always sell for more than what you bought it for, okay? So if I'm doing a covered call, my average cost basis is $27, let's say on SCHD. I have 100 shares with a cost basis of 27. I want to sell them higher than 27. I'll look at the 27.50 puts. I'll look at the $28 puts as well. You never want to sell for less than what you bought unless there's some reason that you're just trying to get out of the stock. But here, I'm more of a conservative investor. I stick to like, blue chip stuff, dividend kings, dividend aristocrats, because guess what? The worst case scenario is I get stuck holding SCHD. Like, not a big deal in my personal risk tolerance level. Same with like some of the other blue chips that I like doing this on. Merck, Procter & Gamble, J&J. Do I think these companies are going to be gone in the next 10 years? No, I don't think that's going to happen. So I'm able to not only run covered calls on these great dividend paying companies or ETFs like SCHD, but I'm also able to do them on blue chip companies that I believe in as well and collect that monthly premium and, of course, that dividend check as well. Now, with that said, what is the ideal time to purchase our shares, right? Well, the ideal time is to do something called a cash secured put. Now, cash secured put is slightly different than a covered call. It's the flip side, right? So let's say we want to buy 100 shares of SCHD, right? Well, we can go out there and buy it for the current market value of $27.72, or what we can say instead is, hey, you know what? Next month, if SCHD is trading at like $26.50, I'll buy the 100 shares. Now, we would have to lock up about $2,600, right? Let's call it 26 for simple math, right? We're willing to buy it for 100 shares at $26, right? 100 times 26 is $2,600. So your brokerage will lock up that money, but we're collecting that premium up front. So with the covered call, you're using our shares as our asset to collect the premium from. But on the cash secured put side, we're now using our cash and putting our money to work and collecting a premium while we wait to buy the stocks that we actually want at a better discounted rate. There's a lot more that goes into this, guys. So attend the Ark Options Strategy workshop. Click the link down below. Select the time that works for you. And in addition to that, I'm going to give you my calculators that I literally use every single day. I can't even live without these, plus my trade log to keep myself nice and organized. Click that link and attend the Ark Options workshop down below, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.